New all-time highs for the S&P, despite all of the tumult that's going on in the Gulf. But actually, the interesting thing for us today doesn't have much to do with any of that. I'm really pleased to have Unusual Whales with us today because I know a lot of you had questions, and we're going to talk about it today on Open Interest. Oh, no.
Is Snorlax?
Hello, everybody, and welcome. I'm Mike Coe, and today we are joined by Unusual Whales. And you were just starting to explain who you were, but I don't think they were able to hear you. So if you could start again and introduce yourself and talk a little bit about Unusual Whales, that would be phenomenal.
Sure. My handle, as you guys may or may not know me from the internet, is Snorlax. I represent the Unusual Whales Options Flow website and subscription. I'm here to answer any questions that you guys may have, maybe show you guys a couple tricks. I'm not the actual whale, as I see some people speculating in the chat. I'm just someone who helps him out around the place. But feel free to, I'm gonna watch the chat, so if you guys have any off-the-cuff questions, feel free to just drop whatever, and I will do my best to get you a succinct answer. But I'm happy to be here. Big fan of Mike. Yeah, let's have a good afternoon.
Yeah, it is super great to have you. Can you just give, for anybody who might be watching this either live or watching it later, can you just give us a little bit of a backdrop on, how Unusual Whales got started in the first place and what the initial intent was? And I know one of the things I've observed about you guys is you add a lot of features all the time, which shows that you're using your own product for your own purposes. So give us a little bit of an understanding of you don't have to give the names of everybody involved, but who's involved and how this thing got off the ground in the first place.
Sure. So it's been around 6 years when we came about in the wake of COVID 2020. It's a pretty small team, so I'm not going to name any names specifically, but the first foray that we got into was congressional trading, and I think that we had a pretty big hand in bringing that topic to the surface. It's something that you can ask anyone in the streets about, and it's something that they kind of have at least some idea of now. That might not have been the case prior to COVID. We had like the senators, insider trading, stuff like that. So the topic had a lot of interest, and then from there, kind of naturally segued into all right, so these are just kind of like some speculative trades, like in the equity markets. Like, what can we see in the options market? And at first the tool was very rudimentary. I mean, like we didn't even have like an options flow tool to start with. It was just kind of like an aggregation of market activity that was kind of curated for the user. But we've come a long way. And I'm happy to show you guys a lot of the tools that we have here today. And show off just like how, some ways to track options flow, think about it, look at it, scan for it, that I think should make you guys' workflow a bit easier.
Yeah. On the unusual trades, that first bit where you guys started to track, the trading and investing activity of folks in Congress, and which I think a lot of people were interested in because Nancy Pelosi's husband, for example, has one of the seemingly more successful trading track records that we've ever seen. And so Subversive Capital Advisors, that's part of you guys also, or affiliated in some way, is that right?
At this point, we're only affiliated with the ETF by name. I don't really know too many more of the details, but we don't really have too much to do with the ETF. I guess we could just say we kind of inspired it, if you will.
Mm-hmm. Yeah, I mean, for those that don't know, that ETF is on our platform. Mike Venuto, who's our CIO, and Dan Weisskopf, who I was on a live stream with earlier today. These are the fund managers of, and I'm assuming there's going to have to be a ticker symbol change because the ticker symbol for the one I'm thinking of, the better performing of them, was the one that tracks the Democrat members of Congress, and that was ticker symbol NANC,
Yep.
November Alpha, November Charlie,
Yep.
After Nancy Pelosi, presumably. And since she's retiring, I guess you're gonna have to come up with a new ticker, or is it just gonna stay the same? I wonder.
Maybe it'll stay the same. You mean like, for sports, they're always kind of naming the award after, like they just recently changed the All-Star Game MVP to the Kobe Bryant MVP award. So I mean, the top trader might just get like the annual, I don't know, the joke is falling flat here, but like the Nance Award, I don't know. The ticker probably won't change if I had to guess. I think it's kind of
Mm-hmm.
stuck. And the alternative, the Republican side being Cruz, which I believe is KRUZ. Someone can
Mm-hmm.
correct me if I'm wrong. But that one, yeah, that one doesn't do as well, for sure.
Yeah, it's funny because even before I had any association with Mike Venuto and Dan Weiskopf and the folks over at Title Financial Group, which is a platform for ETF managers, so they can issue them for people who are managers but don't want to deal with all of those logistics. They can go to platforms like Title Financial Group and they can basically help bring an ETF to market. So even before I knew these guys, or maybe even before I knew of them, I knew of Nance. And it actually was in my CNBC Best Ideas for the Year acronym a couple of years ago.
I remember that
So,
episode actually.
yeah, yeah, I'm trying to remember now. So in 2024, I actually ended up in first place in that whole thing, and I'm trying to remember, was that the year that I did it, or was it a subsequent year? I don't remember. But in any case, yeah, I really like the stuff that you guys do. So if you could just kind of guide us through, sometimes they will say a day in the life, but I'm kind of thinking, I sit down at my desk in the morning, I have unusual whales. How do I sort of get started? What's the way that you use it to identify things that you might want to take a look at and figure out how to trade things?
Sure. So there's definitely not a singular way to do anything. My workflow might vary significantly from someone else's. So one of the first thing that I do, and if you guys follow me on Twitter, then you'll have seen me post these kind of updates. Is um, I'm 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 up around 6:30 in the morning Eastern. Open interest data comes out at around 6:40 a.m. Eastern, which is several hours ahead of the open, nearly 3 hours ahead of the open. And it's a very powerful metric. Because I mean, like, without open interest, without volume, there is nothing, right? So I mean, like, volume and open interest are kind of the two metrics that we live by, and that we need, for any trade to take place. So for example, yesterday I'm interested in the QQQ 635 expiring on May 1st. I sit down in the morning in the pre-market, that is. So there's no price action here. There's no volume because nothing's happened. This is in the pre-market. In this case, it's not really, this wasn't a necessary step in my workflow, but I'm observing, a few things. I'm observing yesterday there was the activity that took place here. We're seeing an instance of 16,000 volume taking place in the middle of the session. We know that 16,000 volume taking place against an open interest value of 2,300 is, it's a clear opening trade here. And barring the lack of volume later in the session, we know for certain that the trader has maintained their position to close. You can see it reflected in the open interest here. So this is a value that I would see in the pre-market. In this case, it's very cut and dry. It was clear and dry. I didn't need to see this value in the pre-market, but it's just still good to look at it and verify it for your own eyes. Do I have any examples where it's not as clear? Let me just click through here. I mean, it's not always about increases in open interest as well. I mean, sometimes it's a decrease in open interest that you might be interested in. Let's take this chain that I was just talking to Mike about before we went on air. Nothing of note. It is a large SPY put, but nothing to tail in my estimation. And in fact, the trade's already been closed out. So in this instance, I was looking to see a decrease in the open interest this morning, and that is exactly what I got. So that kind of tells you a little bit about positioning that's going on. Like, in the two examples that we went over here, we had the large increase in open interest in the QQQ calls, which like kind of naturally, it's a bullish position at face value, right? We have the ask side calls being opened on the Qs, and then presumably someone who was long the 657 spot puts expiring next week. We have a clear opener on April 13th prior to the close. And then we have a very similarly sized instance of activity yesterday, and we're observing a decrease in open interest today. So like, piecing the different information that takes place on different sessions together to come up with like a theory or, weaving a story of what actually took place. Um, so, that's one thing that I'm definitely going to do in the morning. I'm going to sit here, I'm going to check my open interest on the various chains that I'm tracking. So that's like the main thing that I do because, I'm like an options flow trader. I'm trying to find positions. Anything else? Meta yesterday, if you guys were on Twitter, you guys may have seen a bunch of people sharing some Meta. What do we have here? Meta, the 675 June's seeing a 10,000 size trade here. There's a few other big Meta positions.
If I may,
Sure.
when you say a flow trader, because I guess there's a lot of different roles that people play in financial markets, a lot of different ways that people participate. You know, for former market makers, when we usually think about flow trading, we're usually thinking about trading volatility, but that isn't necessarily the way, from what I'm gathering, this isn't the way that you think about it necessarily. So when I was a flow trader, what I was doing was taking shows from, big institutional brokers and saying, okay, I think this thing is worth 30 vol, and if I have a chance to buy it at 29 vol or sell it at 31, assuming it fits my book, that's what I'm going to try to do. And then I'm basically trying to buy and sell volatility all day, which means I'm hedging these things delta neutral and stuff like that. But actually, would it be fair for me to say that when you talk about flow, you are trying to divine, in part by looking at the activity that's going on in the options market, the directional bets that people are making? Is that fair?
Yep, I would say that that's like a very accurate way to put it. Definitely not as concerned with volatility. I mean, I should definitely be a little bit more clued in on it. I mean, that might just be a product of my ignorance. But yeah, I definitely do prefer identifying, I guess, the sentiment on specific tickers, specific trades. I don't want like a general sentiment. I want to see specific trades being put on, because I think sometimes like the general sentiment might not be such an accurate look to what kind of like the smart money's doing. For example, I mean, you have a ticker like Microsoft. Maybe not some good examples recently, but like Microsoft is like a mega cap. There's always just a crazy amount of activity on the mega caps that kind of, I guess it makes identifying the directional bets a little bit difficult, because Microsoft, I'm sure, trades an average of like 1 million+ contracts a day. Nvidia, Tesla, those are trading several million contracts a day, maybe even in the 10 millions. So
755,922 contracts is the 20-day average call and put volume for Microsoft. And you're right, Tesla, Netflix, which are generally speaking the two most active underlyings, are going to trade millions on average per day. But it's funny because, when, as a flow trader, from my perspective, as a vol trader, if we could have anything, we would have loved, absolutely loved to have some insight into the direction that the underlying stock was going to take. In fact, it was beaten into us at an early age as vol traders that we weren't supposed to be making directional bets on the stocks. Like, your job is to trade vol, let other people, pick whether a stock is going to rise or fall. But ultimately, for almost every participant in the market, that's one of the most important things that you could get. And if I'm trading an option unhedged, I care a lot. I always care which direction the stock's going to go in, but I care even more if I'm unhedged until such time as I am hedged. So I think most people watching are more interested in your perspective as a flow trader than mine as a vol flow trader. And with that in mind, let me ask you a question, which is that, because you pointed out that a lot of these big names trade a lot, we're coming into a really interesting period, right? Because we're now at the beginning of this earnings season, right? And we've got some big names coming up. In fact, we've got Netflix tomorrow, right, after the close.
Yep, sounds about right.
So maybe you could do two things for us in the Unusual Whales platform. Number one, if I was an Unusual Whales subscriber and I wanted to say, okay, what big earnings are coming up? What is the mechanism in the platform to do that? And then once I've identified one, I just happen to mention Netflix. How would you use the platform to take a look at that going into the print?
Okay, so that's a great question. We will use Netflix as an example. There might not always be a move to put on, but I'll just preface my little spiel by saying that. But let's see what Netflix has in store for us. So the earnings calendar, obviously a good place to start looking for a potential trade idea. Netflix, historically, this is what it's looking like. The expected versus actual move. So what we're looking at here is if you're seeing a red mark, that means that the ticker traded outside, it exceeded the expected move the day after the print. And if it's in the green, the stock traded inside the expected move. So in theory, if it's green, the option sellers win the day. If it's in red, in theory, the options buyers would have exceeded the price in move, made money on their overreduced contracts, something like that. So we're not really seeing too much of a trend here as far
I
as
love this display, by the way, because it gives context not only on how much the stock moved over the past 15 reported quarters, but how much the options market implied it would move ex ante, as well, and being able to compare that to today. So, as I'm looking at the screen you're showing us right now, would it be a fair characterization based on, it's not a histogram, but those sort of bars that you have there? It looks like the implied move's not that big. Is that, on a relative basis? Is that compared to what it's implied in the past?
so let's see, we're seeing a move of 6.12%, which if we're just kind of eyeballing it, I mean, it kind of lines up historically. I mean, we are seeing a lot of sevens. I wonder if the split had anything to do with that. It did undergo a 20-to-1 split at some point in the last few quarters. I'm not actually sure if split prices affect. I mean, like the stock is obviously a lot cheaper now. It's obviously a lot more malleable. Retail traders can get in on it because it's not, $2,000 a share anymore.
Mm-hmm.
So
Not like well, actually, Booking has now split as well, but it's not like an A share Berkshire anymore, where a single contract would have been a huge amount of money. Let me ask you this: so a chart that I often show, and actually we had somebody asking about this. So FinWest asks us, Mike often shows the implied volatility graph, the vol smile or the vol smirk. Is there a mechanism where you can show the like a specific expirations skew? There it is.
yep. So I think
Right there in the
this
lower right.
is what you're looking at. I did see that question. I just couldn't get to it, but I'm glad Mike brought it up. I'm not gonna be able to provide too much color here because I'm not a vol trader, a volatility trader. But we do have it here. I can. The URL is unusualwhales.com/stock/spy/volatility. It is available in the tickers menu here. We just reorganized the menu, so it's a little bit still in progress. But if you go to the tickers menu, you can click on any of these to get to the ticker screen, and there's a volatility bar at the top. So that smile, you can select expiration, includes 0 DTEs. So that should answer that, I think.
It does. I do have a question. I don't know whether this is a feature you're, and it's not necessarily hugely important if you do, but if we're trying to gauge a sentiment shift, has flow gotten more bullish of late? Has it gotten more bearish? One way that a vol trader would look at that, and there's a couple wrinkles to this, but in general, I might look to a given expirations vol surface, vol curve. So let's say this coming Friday. I'd probably look a little bit further out than that if I was going to try to look at Netflix because they have an event coming up. You're going to have event variance baked into the volatility cake there a little bit. So vols are going to sort of ramp up as the event takes place, and then you're going to see the crush thereafter. But what I might sometimes do is say, okay, I'm going to look at an expiration and see is the curve shifting up on the call side or down, up on the put side or down? Is there a mechanism to do that here, or do you guys focus principally on gauging sentiment by looking at the flow and then quantifying how many calls were bought or puts were bought? Maybe you could walk us through those things.
So as far as using vol data for that, I mean that might be something that you can accomplish with the API, which is something that I'm not a programmer, so I'm not unfortunately handy enough to do that. But as far as sentiment, I mean,
Well, we have a visual here, so that's a good start. Yeah.
yep. As far as like sentiment is concerned, like I mentioned a little bit ago, I'd like to find positioning, specific positioning that isn't just kind of like run of the mill flow into like an arbitrary contract. I would like to see like a definitive position being put on. And this may or may not kind of segue into a question that we have here. I don't know if you want to jump to this question right now, but we have someone asking, how do you conclude whether
Yeah, I'm
high?
going to throw that up on the board right now.
Yep.
So I think I'm doing a screen share that shows that. But yeah,
Yep.
how do you? So the question, and this is from MDM 24/7/15. How do you conclude whether the high open interest, and actually you say high? I'm assuming the question might mean high volume and open interest because those are two different things, right? You can have intraday volume that is substantial, which won't necessarily be reflected in the open interest until the subsequent day, or just taking a look at open interest and saying, I want to go backwards in time and figure out whether those bought or sold, that kind of thing.
Yep. So I'm going to try to tackle the question from a few different angles here. So the ticker in question that I'm going to use for the example here is Burlington Coat Factory. If you guys follow me, you guys know that I tweet about this ticker quite a bit because there is some mystery trader who's been putting on a series of short puts on this name for like the better part of 2 years now, maybe even longer. So short puts, I know Mike's audience is smart. Short puts, you guys are writing the puts, so they're not long puts. You're not buying the puts, you're shorting them, writing them, selling to open, whatever verbiage you prefer. So the ticker in question, Burlington Code Factory, if you look at the options profile, we can see that there is, around 30,000 total open interest, of which the majority is puts,
Wow.
whatever that math is. It's nearly a 5-to-1 ratio, right? And if we look at the options, the Burl options chain, if you will, sorted by open
We call
interest.
that 80% where I come from.
Yeah, about 80%. So if we look at the highest open interest contracts on Burlington, you can see indeed it's just kind of dominated by puts. So this is like about as the kind of the simplest example you can come up with for this question because so this name doesn't really trade that much volume, so it's very easy to identify that this trader is kind of doing the same thing that they've been doing. Now, nothing explicitly says that it's the same trader, but like I don't know, like I'm not a detective or anything, but after 2 years of seeing someone or some people putting on a very similar looking trade, like at some point I have to just assume that it's the same trader, right? So we do see on this the top open interest, nearly 6,000 open interest on this specific 270 put expiring on May 29. If we look at the historical volume and open interest as well as the chart for this contract, we can see that the position was initiated on April 10th, about 38,000 contract or 3,800, excuse me. 3,800 contracts opened here. Another 2,000 opened on April 13th. The open interest increasing as you would expect it to on both sessions. So over the course of 2 days, someone has opened nearly 6,000 of these Burlington puts. However, I believe them to be short puts, not long puts. The principal reason, apart from kind of observing this repeated pattern, is the fact that these contracts were for sure opened and they're being opened at the bid. So kind of using a few assumptions to piece together that this specific open interest is probably bullish open interest. And if we ran through every single one of these top 7 puts, you would see a very similar thing. If you just looked at the historical, you would see that the transactions are pretty much all of them are being opened at the bid, at or closer to the bid. Just flip through a couple more. You can see right here.
And you said those are at the 270 strike?
So the one with the most open interest is the 270 put expiring on May 29th. And that is for Burlington Coat Factory, ticker BURL. So this is like
So that's a 20% discount to the current stock price. This is that's pretty interesting. So you've got a company here growing adjusted EPS at probably just shy of 20%, a little over 20%, 12-month trailing. Top line growth of roughly 11% year on year on the revenue side. Between right now, the street's looking for, so that if their fiscal year ends at the end of January, so we're really in fiscal 2027 for anybody who's looking at their financials. But the anticipated, something I like to look at is the anticipated free cash flow growth, which for them is 60% year on year. Now, I would point out that it's not like it's generating massive amounts of free cash flow yield, because we're dealing with a $26 billion enterprise value, probably a little over a $500 million in free cash flow for the calendar year ended December 2027. But that is definitely interesting, because the amount of open interest you just described is almost 80 basis points worth of the float. So that means that somebody is selling puts on almost 1% of the company.
Is that just this specific contract?
If you take 6,000 contracts, $270 notional, which is where they'd be picking it up, but it's $340 a share, or give or take, Burlington right now. So you're essentially saying I'm selling puts on 1% of the company. So actually, I just gave a bunch of sort of fundamental stats on Burlington, and I think my CNBC colleague Karen Feinerman, and Karen, I apologize if I'm getting this wrong, but I kind of remember that this was one of the names that she happened to like, and she's sort of a deep dive fundamental long short investor. Nice trade, by the way, because this thing is better than doubled off of the 2023 levels. So nice trade. Is there a way to look at the fundamentals in unusual whales, like basic financial
So I
signals?
have a link right here. I'll go to that page right now. I don't know if I have a way to. If I send this to our chat, maybe you can relay it into the wherever. So I sent you the link over the Zoom chat. I'm not sure if you can relay that. But we are scraping the 10K data for companies that have a 10K. So foreign companies won't have this data. Some of this data, I know for ticker TSM, it's in Taiwanese dollars. So the cash flow is not, they don't have $1 trillion USD cash flow. It's in Taiwanese dollars. So check that out. And if you guys see any like layering errors, please let us know, because the 10K scraping process is like, it's really, it's kind of hit or miss. But we are doing our best here.
It's not your fault. I will tell you that for a while we were scraping, we were trying to scrape Edgar data 13Fs for options positions, because of course in the 13Fs all of the companies have to put their holdings in, but nobody really seemed to understand the process. And so I would look at some 13Fs and I would see, Millennium claims to have, I don't know, 300% of the open interest in a single stock's options. And it was pretty easy to say, okay, well, obviously that's not the case. And what was happening was they were reporting their options positions not as contracts, but on a per share basis. So they were basically, the multiplier was getting applied, after the fact. So, maybe they were short 1,000 puts, and they would enter 100,000, and then when you did the scrape, it would get multiplied by 100 again. So now it looked like they were short puts on 10 million shares of a stock or something like that. And also the other thing is that the 13Fs were very good on the long side, not on the short side. So it was, I can appreciate your pain. Sometimes looking at the federal filings, you have to do some detective work and make sense of it, because the people who fill those things out don't really understand how what they put in comes out the other end.
For sure. Also, like, there's like just like a huge kind of illiteracy around 13Fs. Kind of see it in the way that they're reported sometimes. Like, I think when Burry, I'm not sure if it was Burry's put position, but I mean, like the networks all ran with like, Michael Burry has like a $100 million, Palantir put position, but like the total premiums paid are probably like, I don't know, like 75,000, because they're doing the whole.
They were doing a notional exposure, so they were assuming if you bought 1,000, let's using your Burlington coat example, if you bought 1,000 puts, let's see Let's see what the most active contract is in Burlington. Maybe you can pull it up on Unusual Whales, and I'll just take a look on my own screen in the meantime while you do
Yep.
that.
So today, no
Um,
contracts over 200 volume. It's like just it's such a thinly traded ticker. Um,
June 370 calls. Is that the most active contract today?
Give me 1 second here.
Looks like 192 trade against 78 open
Yep.
interest buyer.
Single leg.
Looks like it's probably a buyer.
Yep. 370 June.
Yeah, so that's well, I mean, 370. It seems out there, right? But actually, this is a $340 stock, so that's actually up only about 9% or so. But this would be an example of how that sometimes gets reported in a really screwy way, because what they would do is they would say, "Oh, 200 contracts trade. 200 contracts is 20,000 shares. 20,000 shares of a $340 stock." So they would go and tell folks, "Oh, you know." Somebody is long 6.8 million, but in fact it was really 200 contracts at 1182, so on average, so the total amount of premium spent was 236,500 bucks. If it was a 200 lot, it's actually slightly less than that. So you're right, sometimes when you see the news, the way that it gets reported, but you know what, how exciting is a news story if you say someone bought $200,000 worth of premium?
Yeah.
That's not nearly as exciting as 7 million.
Very true.
So,
Very true.
You got a little bit of that.
Gotta get the markets in turmoil, audience paying
yes.
attention.
What do you do whenever they show markets in turmoil? What do you do?
You just buy? I don't know. I'm not quite sure what you're asking.
Yeah, I would say that's probably not a bad idea. Like buy S&P futures.
Yeah.
It's like, and if you bought already and they double down the next day, then start, I don't know, back up the truck perhaps.
Well, it's interesting because like sometimes the market might open down a percent, and then within the opening 2 minutes it's bought back up, and then CNBC will come back from commercial break and they'll still run like the markets in turmoil, S&P futures close, they went into the session down 1%, but we're back green. And it's just like, what are you talking about?
Well, I mean, you could look. You can say, does turmoil necessarily mean that the market is declining? They could just say it's moving.
It's true,
right?
It's true.
They could, and look, I'm on CNBC fairly often. I think a lot of the people that are on there's a lot of smart people on, but admittedly, sometimes the language that describes what's happening is, it's designed to provoke a reaction. Whether or not that really characterizes how the market's behaving is another matter. Maybe we can go through another example. I'm going to just take a look. Could you just show, you brought up that earnings calendar before, which showed the names that have upcoming earnings. Maybe we can take a look and see if we can identify another name and go through some more examples.
Sure. Maybe go to the next week because I think there's going to be a lot more. I'll just click through a few here. Let me know if you see any names. If you want me to pull any name up in particular.
I don't. I mean, you're looking at the flow all the time, so probably we can. Let's see if I'll scroll through here. Let's see if we can find something that's kind of interesting to look at. So we see that. We got United Airlines is going to be coming up on the 21st. That's interesting simply because I'm guessing we're going to get more insight on the impact of higher jet prices as part of the management commentary. So maybe I don't know how much of an impact it's going to have on earnings. I assume it's going to have some because it's one of the larger inputs to operating costs. But I'm guessing that those insights are probably going to be something. So that would be one I would be interested in, United Airlines.
Yep. Anecdotally, has a larger priced-in move, the largest priced-in move in the last year.
Mm-hmm.
Historically, it seems to be an options destroyer. It seems like it's closing inside of the expected move. We could say 1, 2, 3, 4, 5, 6, 7, 8. So 7 out of the last 8 prints, you could say it closed inside the expected move. So if you have the risk tolerance to sell like an iron condor, perhaps that might be I mean, like that's the only trade I can think about putting on if I see something like this. Um,
Is there a mechanism in unusual whales to create an iron condor, or to take a look at one, or structure the payoff, or just find the definitions? How if somebody who doesn't know what an iron condor, who might be watching now, how can they use the platform to learn what that is and how it works?
so there's a good question. So we did have an option. Well, we do have an options calculator, options profit calculator. It's a little hard to use. So I'm not gonna pretend like, hey, just plug these in and you're gonna get what you're looking for. So maybe we'll skip that. But as far as education is concerned on the position, we do have a handy
I
page
see one
here,
right there.
unusualwhales.com/option-strategies.
I
Uh,
see the condor picture. You're scrolling
I'm
by it
scrolling by it. Let me
right
see
there on the
here
right
on the
hand
right
side,
hand. Yep,
right there
right
in the
there.
middle right. There we go.
So the short iron condor, which is I'd say it's a hair above an entry level. Yep. So I mean, intermediate. I guess you could call it an intermediate strategy. It is a four-leg strategy. So if you're buying a call, that's just one leg. If you're buying a spread, that's two legs. So this is four legs. Two puts, two calls. Um, Trying to think here. Is there like a safe way? I mean, like there's a fixed loss here, so not the riskiest position you could put on. Um, and then you'd have to
Yeah,
discuss how much credit you think it's worth. Do you have like a sweet spot
yeah. I
that you
mean,
shoot
what's
for?
interesting? Yeah, I mean, what's interesting about a condor? So I often talk about synthetics, and that is that you can actually structure a condor trade as an iron, which means a put spread combined with a call spread. You can structure it as a call condor, and the payoff will actually be synthetically very similar. Or you could structure it as a put condor, and the payoff structure will be effectively very similar. The important thing for everybody to remember when you're constructing synthetics. So if I was looking to do this trade, four legs, and UAL right now is about $94. We'll call it 95. So let's just say, for the sake of argument, that I believe that United's going to be range bound. I think it's going to be range bound within a 5% range. And so therefore, I'm willing to be short the 90 strike, and I'm willing to be short the par strike, the 100 strike. It doesn't actually matter if you're making that trade whether you, for example, sell a 90-85 put spread and sell a 100-105 call spread. That will accomplish the same objective. And I realize it's a little hard to get your arms around sometimes, but if I actually bought the 85 call, sold the 90, sold the pars, and bought the 105 calls, my P&L is effectively going to be the same. Or if I bought the 85 put and sold the 90, bought the 100 put, and sold the 100 put and bought the 105s, it's going to be the same. And the important thing when you're creating synthetics is that think first about whether you are long or short a strike. So the iron condor, I'm short a put spread to the downside because I'm expecting it to stay above my short put strike. I'm short a call spread to the upside because I believe it's going to stay below my short call strike. When you're creating synthetics and you're trying to work through this in your own mind, if you know the strategy using one construction, just make sure that you are long the same strike and short the same strike. That is to say that you can never synthetically create a long call by trading a short put, right? So if I want a long call and I'm going to use a put to create it, I get long the underlying, and long a put is equivalent to the same strike and expiration long call option, right? So that's one of the reasons why you can create, these strategies. So if you go into your platform and it says call condor, or it says put condor, and then it says iron condor, and you said, well, these guys showed an iron condor, so I have to really make sure that I trade the iron condor. That's actually not necessarily true. The important thing, though, when you are going between one synthetic and another is just make sure you are long the same strikes and short the same strikes, and you're going to end up with the same payoff profile. And so what did the platform say the average move was, give or take, for
Let's
UAL?
see here. Um, so on average, looks like it goes down about, it'll trade 4.5 or I guess 4.25 points lower, or percentage points rather. Maybe four points lower the session after
Mm-hmm.
historically. Actually, this is the last 2 quarters. Let me bump that up here. So it's actually seeing a gain of about 5% in the last 4 years or so. As far as structuring a trade, something to keep in mind is
Can
obviously,
you just go back to that screen for a
yep,
second and just explain to people what you're looking for? Because this is a visual display I actually don't see in a lot of platforms. I'm looking at a Bloomberg terminal on my screen, and it talks about an average move, but it just gives you a table. So this one was up and that one was down. But here you're actually tracking sort of a price path for the underlying relative to the average price path for some look back period, right?
yep. So this is over the last 16 quarters, so approximately 4 years, give or take. So we can see that there does appear to be some run up into earnings. If we look 3 weeks out, the 3 weeks outline is kind of the zero mark here. So running into earnings, you might see about a 5% bump over the course of the 3 weeks leading up to earnings. And then for 3 weeks after earnings, looks like it continues on course for another 4 percentage points or so. Um, so definitely like a move that you might, if you have a long position, you might not feel too bad seeing what we're seeing right now. Um, Still not sure if I'd want to be long the options given uh, it seems to not, the options are properly priced, I guess is the best way to put it. Um,
You know what's interesting here is that you see how we have this little bump up. When did that bump up just take place? What day was that?
was that around here
Where,
somewhere?
yeah, right there where it rallied. What day is that?
Looks like 10 days out, so maybe 4 or 5, something like that.
Not around maybe April 9th,
Could
April 8th, 9th. Did
April
we see a move there?
9th. I don't see it there.
So last week, no move on April 8th or 9th going in or around.
Let's see if this is correct. Uh, I mean, yeah, there was like the 7% gap from between what April 7th to the 8th. Yes, I
Hmm.
guess that's that right here.
Okay, that's it. All right, so that's the move that we're looking at. Okay, so the reason I bring this up and the reason there was that move. So for those who are taking a look, um, that was the day that Delta reported. So I'm assuming if that was 4-7 close to 4-8 close, that Delta must have probably reported that morning. Is my guess, which is kind of interesting. And Delta did catch a bid. So it traded just shy of 4% higher on the back of their earnings result, which they reported on the 8th. And like I said, I'm trying to remember, but actually, why am I can go to the event details. Let's see, when did this actually happen? That was, yeah, it was in the morning.
Of the 8th. Yep.
So, yeah, and so that's what that move is. So better than expected results apparently from Delta, and in sympathy, it looks like United traded with that. So another reason to look at that iron condor strategy that Snorlax's talking about here is, you know, there is some bleed through of information from Delta. Now, in fairness, for those who are looking at it, am I going to signal the all clear in United simply because Delta and United are competitors? They operate in the same area. Unlike the Loves and JetBlues of the world, they have sort of a bigger business mix. United did have a couple route cancellations as a result of the higher oil prices. But one important consideration that I would just remind everybody of is that Delta owns a refinery, the one that they bought from Phillips 66 back in 2012, 2013. And so they have less exposure to the crack than other carriers do. They also have a slightly stronger balance sheet. But I think that's very interesting because you've gotten essentially the move out of United that Delta already took. Now you have a much higher than average implied move. And historically, this thing has not even moved as much as it normally implies. And what was that number? If we just scroll down, I can see this. So we can see how many times has it actually gone outside of its implied.
Oh, I just
No.
tallied that up kind of visually.
Looks like 5 times. 5 times in the last 15 is what I'm looking at
Oh,
your
yep,
own graphics, which
yep.
gives you like a quick and easy, dirty way to eyeball it. And now it's implying a bigger move, and we've already seen that it moved in sympathy with Delta. I don't know. I kind of like that trade, so thank you for that. That helped out a lot. Let's see here.
One more note I might add. We do have like an implied move, kind of like a little simple visual here, where you can see the priced in range. They're pricing in a move between $87.11 to $101.43, which could be useful for picking strikes. Not sure if it trades in like a dollar or 50-cent increments or what the deal is with UAL. I guess we could just look that up here real quick here. The 24th strikes. What's going on here? Oh, it's a little off center.
It's
Okay,
got
so
dollar strikes
dollar
and some
wide.
half-dollar ones
Yeah.
even.
So I mean, if the lower leg or if the lower end of the move is 87, I mean, I haven't looked at the payout structure, but like, I mean, like you might transit with like an 86, 101, 102, something like that.
Mm-hmm. Are you and this goes out in time, so gives a lot of utility because commonly one of the things about options graphics that I find isn't super helpful is that when anybody looks at a visual of a stock, usually they look at a price chart, and a price chart is a time series, and so it makes some sense that if that's your common way of thinking about a security, that you're going to think about by projecting out in time on that time series. So I really like this as a visual. I think it's exceptionally helpful in that sense. So we have a question here. Yeah. Let me see. Oh, yeah, here's a question we got from FinWest, who's a regular viewer. I always consult unusual whales for my earnings trades. That's a helpful display. No, that's not the one. I saw it. He was asking
I think it's
about
about the stream schedule,
where.
perhaps.
Yeah, where is? I'm going to see if I can find that question and put it up here. But basically, I'll find it and I'll put it up. But the question was, you do streams all the time. Is there a regular schedule where you let people know when those are taking place? Because I think people are very interested in these walkthroughs that you're giving.
So there is a schedule. Let me go to the page here. So we do run some streams almost every day of the week. I'm not always the host. I'm not sure why this is out of order, but on Mondays at 9:30, right at the open, we have a stream that is on X or Twitter and YouTube. The same stream takes place on Wednesday at the open. This is hosted by someone else, but they are also quite adept with the platform. So again, 9:30 in the morning on Monday and Wednesdays, and then I do streams on Wednesday and Thursday. So I guess that's only 3 days out of the week. But regardless, so Wednesday I did one today. That one's kind of more of like an onboarding for newer people. But I mean, anyone's free to join. I'll answer whatever. Today, not too many questions, so it was mostly just me kind of rambling on about stuff that I saw on the flow feeds today. And then I also do a stream usually on Thursday, sometime in the afternoon. The time is variable, but are usually around 2 to 2:30 p.m. Eastern is the start. And in this stream, I pretty much just take requests from the users. People will just mention a ticker or a contract in the chart, and I'll kind of dissect what I see. So feel free to come out to those, and all the streams are also recorded on YouTube, so you can check out the past streams. Yep.
So we got another question here, and actually I haven't used unusual whales in this context, but if there is a way to answer it, the question we got is how to use Gex, Dex, Vanna for Netflix to set trades for Netflix tomorrow. So this is a viewer who's interested in gamma exposure. How do you guys think about, and do you track that? And if you do, where in the platform can people see that?
So personally, I'm not gonna. I can't say that I've referenced the Gex for an earnings trade idea. I mean, I probably definitely should. As far as Gex is concerned, I mean, there's several schools of thought on the presentation of Gex. I mean, there's like the standard volume-based Gex that I think most people are familiar with. we kind of take it a couple steps further. We also have directionalized volume, so we're taking into consideration the bid and the ask of any given transaction. And this doesn't apply to Netflix, but for SPX, we have a very useful GEX tool called Periscope, which takes data from the CBOE. In 10-minute windows, we get the actualized kind of buy to open, sell to open, buy to close, sell to close activity for SPX and SPXW. So this is probably the most accurate look at GEX that is out there, I think. Don't quote me, but I'm pretty sure this is. I mean, there's other platforms that also have this 10-minute refreshing GEX view, but this is definitely one of the views to look at. So I mean, like we can just take a look at Netflix real quick here. Let's take a look at the expected move, some of that stuff that we were looking at a second ago, just to kind of give ourselves some context here. So Netflix, definitely running up more than it like it has historically. I mean, historically close to zero run up here. Um, Recent history as far as the implied move and the actual results. Kind of a mixed bag. I mean, in the last year or so, it's kind of traded inside the expected move, but that's a pretty small sample size because if we just went out another year, you'd see that it traded, well outside the expected move on several occasions. So as far as Netflix is concerned, I mean, I'm not sure there's a trade to be putting on. I did see there was like a pretty big roll today. I think it was. Let's see here. So I mean, like there was some big June flows. I think I saw that on your trailer screen before we went on the air, Mike. That one kind of caught my eye. So some kind of three-legged trade on Netflix. Was it some kind of butterfly? What is it? 10,000, 10,000, 10,000. So I guess maybe not. But I'm not sure that this trade is really directional. I mean, it could be. Give me one second here. Just kind of thinking in my head, talking out loud. So I mean, there was some kind of call spread open. The 110, 130 call spread opened 2 days ago. 110, 130. Was this a roll in its own right? It might have been a roll down in its own right. Maybe not. So I mean, like that is one, I guess, bull position in Netflix. Am I tracking anything? I'm not really answering your question here. I'm not sure that I have a great
No,
answer.
I think the thing that people are probably interested. So some people will use. So again, for anybody who's watching who's not familiar, it's a little bit deeper end of the pool in terms of the directional impact that open interest can potentially have on the underlying asset. So what's going on at a high level? And I'm just going to give my vol trader's point of view on this. Where we were most interested in these things historically was as expiration approached, was a stock potentially going to pin? Because as a vol trader, that was one of the risks that you could potentially face. Give you an example. Let's say I'm long a call for a given expiration that's close to at the money, and I'm short the put in similar measure. And then I'm hedged. So I'm long call, short put, short stock. And I don't have any real Vega exposure. I don't have any real Theta exposure. I don't have any Delta exposure. But if there is a considerable amount of dealer-held long open interest at a strike as expiration approaches, what happens to gamma as time passes, assuming that the stock is close to the strike, is that gamma goes up as expiration approaches. That means that there's more stock to buy below the strike and more stock to sell above the strike the closer you get to expiration. It becomes theoretically infinite. Of course, it's not. It can't be higher than the open interest. If there's 10,000 open, that's 1 million shares, so there can never be more than 1 million shares to buy below and 1 million shares to sell above in the worst case. But the byproduct of that is that if there's a lot of stock to buy below a strike and a lot to sell above the strike, what will happen to the stock as expiration approaches? And what is bound to happen is that unless it breaks well away from the strike, that gamma will act like a black hole. Essentially, it sucks the stock towards the strike price in that instance, right? So that gamma that is held in dealer hands can have an impact on the price behavior of an underlying asset. So if I was a dealer and I was long the call, short the puts, short stock, no otherwise exposure, why do I care? Because I don't have gamma per se. The reason I care is because what if the stock lands at expiration exactly on the strike? Well, do I exercise my long calls and flatten out my position because I'm short stock and I could buy, I could exercise my calls and own the stock and be flat, but I'm only flat if I don't get assigned on my puts. And how do I know that I'm going to get assigned on my puts or not? I don't. So that's called pin risk. From a dealer's point of view, that's called a pin risk situation. You don't know whether you should be exercising your long option because you don't know what the other counterparty is going to do. You had effectively no options position because you were not net long or short the strike. So that's one way that gamma exposure can matter. Another way that gamma can matter is if a stock is migrating in the direction of a strike that dealers are short. Let's say it's an upside call. What do dealers have to do? If you are short calls, you have to buy stock to hedge. If you are approaching the strike from below, what do you have to do? You have to buy more stock to remain delta neutral. And as it goes to and ultimately through, so that, in that case, unlike the earlier example where the dealers were long the strike, you can actually accelerate a move. So gamma exposure is essentially it's a way to use a divining rod to establish what the hedging behavior of dealers who are long or short option strikes might be doing. And what Unusual Whales is doing, because they are tabulating whether options were bought or sold, that gives you some insight into the likely exposure of the dealer community relative to the open interest. Put differently, simply because you see a lot of open interest at a strike does not tell you what the hedging behavior of the dealers who have exposure to that strike are going to do. Are they buying or selling the stock? Depends on whether they're long or short the options on that strike. And so when Unusual Whales is saying these were all bought, the opposite side of that is the dealers are likely short, right? That would, because generally, unless there's two ships in the night where two customers happen to intersect with one another at exactly the same moment, and one customer is sold to another, and neither are trading their volatility, that's almost, it's not likely to happen, right? So almost certainly, the initiating side is going to interact with a dealer. The dealer is going to be a vol trader. The vol trader is going to be the one that's trading the gamma. So this is why when they gauge, and I think you were showing a screen, maybe you could bring us back to that, where you were saying that you kind of weight the open interest base, the GEX, based on how much you thought was bought or sold, right?
Which screen were you looking for? But I mean,
You were
yes,
showing the GEX. Yeah. So you were saying that you kind of weight that one of the nuances that you guys incorporate into GEX was whether or not the initiating side was bought, and you can sort of track that through time. Is that a way to think about it?
so that is the positive identification of the long or short option, the open or close, is only possible with currently SPX. I think the data set is available to purchase from the CBOE for a few other tickers, but the cost is like pretty prohibitively expensive. It is something that we are looking for because I think that would be like, I mean, like you said, like having a look at how how the dealers are hedged is pretty invaluable. People have wanted the Periscope tool to be for other tickers. It's like one of the most common questions we get. How do I change the ticker to QQQ or to NVIDIA or something like that? And you can't at the moment, but we would definitely like to bring other tickers to the platform because this is
well, the way I would tell people to use this information, and I realize that this is going to be, I'm not going to say thumb in the wind, but I think you can use Unusual Whales to try to come up with your own estimates. How would you do that? Right? So if you see a lot of unusual activity taking place today in a symbol, right? And you wish you had like this Periscope feature for that symbol. If you know that the initiating transactions were opening, and you know what the open interest changes are day to day, you can begin to make certain assumptions. If it represents a significant portion of the open interest, what you've seen trade, what you see is the open interest now, you followed that time series. So you've been watching on the Unusual Whales platform. You can see that all these options were being bought, and then you can see that open interest is expanding in that strike. Then one of the things you can do, if that works out to a large portion of the open interest, is you can now begin to make assumptions about what the likely dealer positioning is in that strike. The simplest example would be, I have a toss, and I always used to use ticker symbol ABC, right? Like as a representative generic stock, but we can't really do ABC, XYZ. You know, it gets a little bit more complicated because all these tickers are getting swallowed up. But so you have a generic stock. You see 1,000 calls trade. You look in the Unusual Whales platform and highlight one that you can see was obviously a bought contract and just show people how you sort of see that, right? So now you can see these were lifting offers, very likely a purchase contract. I've got 1,000 open interest the following day. So I know these things were bought. I see 1,000 open interest. What's the dealer position, right? If it's a 30 delta call option, the dealer is short dealer or dealers are short 1,000 calls, long 30,000 common. If the stock goes up and towards that strike, it's a 30 delta call. It's a higher strike by definition. If it starts going up there, what do the dealers have to do? They will be sellers. How much stock do they have to sell? 30,000 shares, right? Once it gets up, you know. So this is kind of, you know, the thing to think about. You can figure out, and actually I was saying they were selling stock. They would be short stock against long calls if they were in it. If they were short calls, then they would be long stock. So whichever way you're looking at. But if they were bought, they're short calls. To the long stock, they have to start buying. You can figure this out even if Periscope doesn't tell you with the information that you have. Now, is it going to be perfect? No. If there's a lot of activity, it's going to be almost impossible, right? But in cases, the interesting thing is it probably matters more to figure this out in situations where there's not a couple million contracts trading than it is in those ones where there is a lot of trading, right? Because the effect will probably be more profound on the price behavior of the underlying asset if it's high on a relative basis relative to the equity volume. So I hope that helps those people who are thinking about how to use the platform for that. Here's a question. Do you use the flip zone for trading options?
I assume he's referring to the gamma flip. Something to keep an eye on for sure. We're not rendering the flip on the website. It's something that has been requested, so I'll just keep pushing for like the actual point to be rendered somewhere. Yeah, but I mean, you know, for sure, observing when the price goes above or below the zone that you identify as being the flip, obviously pretty important.
I'm going to refresh the questions here one last time just to see if we got any last ones, because I've already I asked you to come on for only an hour, and we're already running a little bit over, and I know you signed on early just to make sure that you were able to share your screens, which I really appreciate. And I know the viewers, the ones that are watching live and those that are going to see this in the future, are going to be very interested in seeing other ways that they can use the platform. So I really appreciate Snorlax coming on today and showing us the platform. I believe we usually keep an affiliate link for Unusual Whales. Producer, please tell me, but I'm pretty sure we put that into the description of every video we do. So for those of you who are interested in the platform, I'm assuming that link works, but for those of you who are interested in the Unusual Whales platform, you can click on that link and you can sign up for it there. But until the next time, and I hope there is a next time, Snorlax, we can get you back on because we're probably going to get more follow-up questions, and that's an important point. If there was a question you have that we didn't answer here and now, put it into the comment section for this video, and hopefully we can get these guys back and we'll bring it up again. But until that time, Snorlax, thank you. And to all of you guys watching, thank you very much. We'll see you soon.
Thanks for having me, Mike. Have a good one, guys.